has got more on this for you, and he's with us in studio. Steve, good to have you with us. Is this a case of you're telling me about the good companies and those were the ones that are on everyone's lips, but there could still be some bad apples out there?
Yeah, look, there are some really strong performers out there, and there are some products that maybe you shouldn't be in. It's quite a mix of outcomes there. We were surprised at that piece of research, just how how well really investors were saying their financial advisor had gone. It's been a tough time for investment returns.
And along the gender lines as well, there's an interesting split emerging.
Yeah, look, I guess I don't think it's that more men get financial advice.
Is that
certainly
simply because more men are investing per se?
Look, it might be, but I just suspect that maybe it's falling to the male in the household to actually get the advice. When we looked at satisfaction with the advice, there was very little difference. You know, women were just as happy with the advice being received as men.
The fact that this is the first of its kind, the snapshot you've taken, you'd concede maybe, well, you can't draw too much from it. You know, you've got to build up these things to now get a profile going.
Look, there's no trend, certainly, and we wouldn't claim that there is a trend. But when you look at the investment scenario that people have been faced with over the last 12 months, well, to get that sort of outcome now is very positive. So you know, it augurs well for the future, I suspect.
You know, I was in a car the other night, and the driver who'd been burnt in the tech bubble was thinking about coming back and saying to me, do I go down the route of doing it myself? Do I open a CommSec account, or do I take on a broker? And he was very loath to do the latter, because it's as if, you know, once bitten, twice shy and all that. You know, going to get third-party advice, is there really the level of confidence compared with offshore that you'd be liking to see at this point in time?
Yeah, look, I guess you've raised a few issues. One is managing yourself. Now, remember, there are significant costs. So you know, if you do go the self-managed route,
well, there are costs going down with the broker. For goodness sake.
There are costs both ways.
You know,
certainly, yeah.
Someone would say, you know, why can't I just absorb that myself?
You can't escape costs.
Right.
When you look at, let's say you've got a 25, 30-year-old person in the workforce. Now, they go into a fund, and if they do nothing, they get the default option. Now, the default option might not be that good for them. You know, they're going to be riding 4 or 5 more cycles over their 30 or 40 years in the workforce. If they've ticked the wrong box, maybe they'll be $100,000 worse off when they get to the end.
Well, that's significant.
Yeah, well, very significant. Yeah. The difference between growth and conservative can be just a huge impact on what they retire on. So really, a little bit of advice, it doesn't have to be complex advice at that stage, is very important.
I mean, I think it's very clear that, you know, advice does lead in general to better returns. However, you know, the biggest growing sector of the market is self-managed super funds. It really is a bit of a reaction to cost. When do you think investors are going to focus much more on returns, like you say, rather than the actual cost?
Yeah, look, I think people should never lose sight of cost. Cost is just a huge driver of their ultimate outcome. And when you look at the fee for the actual management of the investment side, it can differ from as much as 0.05% to 3.7%. Now that's a big difference, but that's you know, you get a different product for 3.7% certainly.
What do you say? You get a different product? You get a less robust product?
No. Well, look, for 0.05% you might be getting an index fund. An index fund. Yeah. For 3.7% you'll be getting a very exotic piece of fund. So it's a different thing. But unless you are conscious of what you're paying, you'll potentially be paying too much.
Well, you've said, if anything, there are ways to minimise those fees, including using a discount broker. Now, that has all sorts of other perceptions about it. I mean, how are they able to style themselves like that and undercut and still walk away with it?
What that's about is that there's an upfront fee with some investments. If you're going into some superannuation investments, there's an upfront fee. Now, there are ways of avoiding that. And if you do have an advisor, financial advisor, he might be in a position to actually dial down the upfront fee, and you shouldn't just jump in without finding out exactly what he's able to do. Another way, though, is to access it through a discount broker, and they're in a position to actually get you into a product without the upfront fee.
What's the trade-off?
Well, the trade-off...
Do you see the trade-off?
Well, sorry, David. Yes.
Well, I think the trade-off is, you know, at the moment, we were just talking before in the US, where we're seeing a lot of people moving out of equities and into fixed income. you know, clearly at the moment it does appear that Australians are far too invested heavily in equities, and they've been obviously on a big growth cycle, that good advisors will actually be looking at asset allocation. So on one side, that yes, you do get a lower cost, but you know what, there are some big investment decisions that people need to make, and that's around asset allocation. So I think it's important that yes, you do try and minimise costs, but you do still need to be listening and getting insights into what are some of the big trends in the market, and asset allocation is one of those.
Yeah, certainly. And you can get asset allocation a number of ways. One is with an exotic mix of different investments, but the other is getting into the right choice when you join your super fund. And you know, tick the right box and you do get an asset allocation. Now maybe it's not tailored to your specific preferences, but you certainly do get that allocation just by ticking that right box.
All right, more on your website, Canstar Cannex. Steve, we must leave it there. Appreciate it.
Thanks, guys. Cheers.
Steve, Mick and Becker there from Canstar Cannex.